Welcome back. We're bringing you another weekly review. Holy cow, Quint. It has been a wild week. Obviously, so much going on in the markets and in the world in general. What is going on?
And the markets are relatively flat this week,
Yeah,
which is
not much
interesting.
movement at all.
So we sent out the weekly review. We only really highlighted a couple items this week because there's probably 10 various things that we could talk about of importance. Clearly, everybody woke up last weekend to the news of Hamas basically invading Israel and, subsequent just horrific scenes coming from that region of the world. Now we're seeing, the retaliation and so forth, and it's really just creating a lot of havoc. I know that a lot of people Sunday and even rolling into Monday were extremely concerned over the markets.
There was the feeling that the markets would be down 5% easily.
Sure, judging by our email inbox
Yeah.
or phone messages, you're right. And I think a lot of people were surprised that the market response was up Monday, Tuesday, and Wednesday. In fact, it was a really healthy, strong rebound. And again, I know that's very confusing for a lot of people, so I kind of want to break it down. We'll go into the classroom a little bit, if you will. So markets are moving and have been moving over the last couple of years primarily on interest rates. Interest rates have been led by the Fed. So the Federal Reserve sets the short rate, and then typically the interest rate market on out, so the 10-year Treasury, 20 and 30, adjust accordingly. This is why in the news you're hearing all about mortgage prices or rates being so much higher than they have in the past. It's a result of the Fed raising rates. That's what's created havoc in the markets, right? Interest rates have such a tremendous amount to do with the way businesses operate, the way they borrow money, expand, etc. Also, from a consumer standpoint, if you're not buying any houses any longer, that's going to slow, etc., etc. We all get that. We've beat that to death, so there's no point in talking about that. However, when there is great issues in the world, money outside of the U.S., and even to a degree inside the U.S., but primarily outside of the U.S., money, and when I say money, I mean sovereign wealth funds or institutions or international insurance companies, etc. I mean, billions upon billions of dollars. They clamor very quickly for safety. It's very similar to an investor in the United States if there's concern or, and their thought is, oh, I better move out of stocks. I better move out of the U.S. equities, whether that's a good decision or a bad decision, but that's their first thought. Well, there's very little difference in that and a sovereign wealth fund that may have their money in Israel. They might be invested in the technology that's going on in Tel Aviv or what have you. And so when something like this happens, capital flight, money movement across the globe happens very quickly. And traditionally, and as we've seen again this week, the most secure place in the world to hold your money is in the United States. So we saw a tremendous amount of money move into the U.S. bond market. Now, put your bond hat on. What's the bond market? It's like a teeter-totter. Bond prices on one side, interest rates on another. As bond prices go down, interest rates go up. As bond prices go up, interest rates go down. Okay, what impacts bond prices? Well, supply and demand. Are people buying a lot of them or are people not buying a lot of them? For example, University of Missouri comes to town, play the Wildcats. It's a hot ticket. People are in demand of those tickets. Those prices are higher. If we were playing the, whomever and we weren't very good, nobody wanted those tickets, demand would be down, prices would be down. Okay. Since there's a tremendous amount of money flowing into the United States due to this issue overseas, demand for bonds is up. What does that mean? Well, that means interest rates were down. How do we know that? Well, number one, we can observe that. We can see that very quickly. We came in on Monday, interest rates were down considerably, and bond prices were up. That was good for stocks. That was what prompted the rebound in stocks. I can tell that further because as the week wore on, we actually got very strong economic news. The producer price index was much higher than anticipated. That is an inflationary report. historically over the last 18 months, when we got hotter than expected inflationary reports, what happened? Well, interest rates rose, bonds went down, and the market went down, okay, because interest rates went up. We got a very hot PPI, I think it was on Wednesday, and ultimately interest rates still stayed down, which told me, okay, the amount of money moving into bonds is offsetting any concern about interest rates or inflation. So that's number one. That's why Monday, Tuesday, Wednesday markets were up, okay? And if that continues, I would look for that to continue. Meaning if ironically, it's terrible to say in a time of such uncertainty and craziness, but look at most clients pay us to manage their money and make wise decisions, or all of them pay us to manage money and make wise decisions. So ultimately, we have to look at it through the lens of what will happen to markets. So if there continues to be this chaos and money moves into the bond market, interest rates should go down, and what we've seen may continue with stocks going higher. Now, Thursday there was a little bit of a wrench in the equation.
Right.
Thursday was fascinating. Thursday we had a 30-year Treasury auction. Now, let me take a step back. What are people buying when they typically move? Well, they're not buying 30-year bonds. They're buying shorter maturities. They're not parking their money. They're not going, oh my goodness, this issue in Israel is going to happen. Gaza is going to go on for 30 years.
So
let's buy the 30 year. Yeah.
Right.
They might buy the 10-year, or they might even buy the 2-year
Right.
notes. They may buy something very short term. Well, as many of you, all of you hopefully know by now, our country operates on debt. We don't operate on Duncan. We operate on debt, right? And so every so often, actually I think it's a weekly occurrence, the Treasury goes and they sell bonds and they collect money, and that's what helps us finance our government, helps us finance our activities. We had a 30-year Treasury auction. They're always done in an auction. There's a bid-ask spread. We had a 30-year auction on Thursday that was awful.
Yeah, basically no one buying. Like, they're waiting.
Think of ticket prices,
yeah,
right?
Exactly.
All of a sudden, we launch the ticket. Oh, we got a new ticket to a new game. Nobody shows up to buy. Yeah. So what happened? The bond price went down, just like a ticket price. Ticket price goes down. And what happened to the 30-year rate? It went up. Mm-hmm. That's not great. And that's what threw kind of a monkey wrench into the equation and said, whoa, wait a second, halt this advance in the stock market.
Yeah, you had a Monday through Wednesday really well. Thursday, when that news came out, you could see the market on a chart literally
dropped very quickly.
Yeah.
And basically kind of kept us flat for the week. So a lot of ups and downs, but relatively flat for the week. Now, why did that happen, in my opinion? In my opinion, that happened because people right now are very uncertain about what's going to happen in the United States with our debt and our politics. I believe that one of the reasons that transpired on Thursday is that we did not get confirmation of a Speaker of the House.
Right.
For the first time in American history, we do not have a Speaker of the House. And if you understand anything about the Constitution, we can't operate our government without a Speaker. For some reason, the Founding Fathers said very simply, if we don't have a Speaker of the House, nothing you can do. We need a Speaker of the House.
Well, yeah, because we just extended 45 days to get a budget passed. We're still in that 45-day window, but that's going to come up very quickly, and we have to have a Speaker of the House before anything can get done there.
That's correct. So what's happening is we have this uncertainty in the political world. Who's leading the Congress, or who's the Speaker? Can we get things done? What's going to happen to go into November? And then we have an auction, and we ask the world to bet on us for the next 30 years. That's a tough ask. That's a very difficult ask, right? Think of a company in flux, and you're trying to hire an employee and say, "Oh no, everything's great," and meanwhile, who will be my manager? We're not quite sure yet, but
we'll figure that.
We're going to kind of figure. So that's what's happening now. Again, what does it create? It creates a lot of anxiety, a lot of volatility. Throw in the fact that we don't really know what's going to happen with the energy and oil markets. Is Iran involved in this already? Are they going to get involved? Are we going to get more involved? There's a lot of uncertainty. Now, all this to say, there's two things at play here I want to remind our viewers of. Number one, and I'm going to write a piece, and I'm going to show you some statistics about this. The irony is that during great uncertainty is still great opportunity. Diversification, which has traditionally stunk, right? Most of the asset classes outside of the big 7 tech firms have been flat to down this year.
Right.
So diversifying hasn't been a great thing until now.
Yeah.
Emerging markets are doing much better. Gold is doing much better. International markets are improving. So there's a variety of asset classes that through this transition of what we're seeing should possibly improve to help a diversified portfolio. But history says that during these uncertain times, it typically gives way to a much brighter future, better opportunity in the markets. And so this is an opportunity where a lot of people can get scared out. Oh, I'm going to get out of this. This is crazy. I'll wait till things improve. Well, you wait till things improve and you feel better, and stocks end up being much higher. The second thing, and this is really big, is that through all this turmoil, we're rolling into an election year.
Right.
2024 is an election year, and I got to tell you, history tells us election years are typically very bullish for the markets. So we have the makings. We haven't gone anywhere in 2 years.
Right.
I mean, since 2021, we're rolling into that November time period. Markets have been flat to down. They haven't been anywhere. So nobody's made any real money in the last 2 years. Well, guess what? After 2 years of waiting, now we have chaos and turmoil, and we're rolling into an election year. I can't help but be contrarian and look at this as an opportunity rather than something saying, oh my gosh, it's going to be terrible. I know that's hard. It's a hard pill to swallow, but that's the way I'm looking at it. And as you know, I'm pretty agnostic. It doesn't matter. I can be bullish or bearish, but that's the way I'm looking at it right now.
Yeah, and I think there's opportunities in other spaces, like you mentioned, not just your 7 names that have kind of made the market run, or not just AI that's been doing well this year, but there's other areas, and that's why we're still maintaining that diversified approach and making sure we're in those different areas.
And make no mistake, if you have a diversified portfolio with stocks and bonds, bonds have had the worst 2 years in almost 100 years. So if you're looking at a portfolio that's flat to down over the last couple of years and you have bonds, that's one of the challenges.
Right.
Well, in our opinion, I don't think rates are going higher. I just don't see it. I don't see rates going higher. That's my opinion. So if rates come down, again, think of the teeter-totter. Rates down, bonds up. So in my opinion, we're setting the stage for an opportunity in both stocks and bonds to do very well into 2024. We'll see what happens, but that's my view. There's a lot going on. We'll continue to bring you these updates as they sort of unfold. Anything else to add, Logan?
No, I think that's it. Have a great weekend out there, and go Cats.